Through Taxation Law, Second Amendment Bill 2016, the government has launched a new income declaration scheme called Pradhan Mantri Garib Kalyan Yojna 2016, with the twofold objectives to bring additional revenue for the welfare of the people and also to legitimately bring declared income into the economy. This scheme, in effect, provides another opportunity to the taxpayers to declare their undisclosed income in form of cash and deposits lying with the specified entities like Reserve Bank of India, cooperative banks, etc., by paying taxes and higher penalty. For opting for the scheme, the individual will have to make a declaration, deposits and cash lying with the specified entities on or before 1st April of 2017. On the declared income, the total tax and penalty would come to 50%. That is, tax is at 30%. There would be an additional surcharge of 33% on that tax and a penalty of 10% on the undisclosed income. While paying for these taxes, individual will have to submit the proof of tax payments, surcharge, penalty, etc. Along with the declaration form. However, the government is yet to notify this declaration form. In addition, this scheme also mandates that 25% of such income will have to be kept in deposit for 4 years in a non-interest bearing money. In case the individual makes any misrepresentation or suppression of fact or does not make the payment of tax, then this scheme will become void. This scheme currently does not provide any immunity under certain specified cases like under Black Money Act or Benami transactions, etc., which is provided within the scheme itself. The disclosure under Pradhan Mantri Garib Kalyan Yojna scheme 2016 relates to cash deposits made with the specified entities but does not cover disclosure in relation to other undisclosed investments, gold, etc. In case the person decides not to go in for this scheme, then there could be implications under the Income Tax Act for any undisclosed expenditure, other investments, etc., by way of higher taxes and penalty under the Act. Currently, the Income Tax Second Amendment Bill 2016 has increased the tax from 30% to 60% for any unexplained credits or investments made by an individual. Surcharge has also increased from current rate of 15% to 25% for an income exceeding 1 crore. So what this means is that in case an individual does not opt to go in for this Pradhan Mantri Garib Kalyan Yojna scheme and instead makes a disclosure of undisclosed income in its return of income, he will have to pay tax and penalty of 77.25%, that is, tax of 60%, surcharge of 25% and education cess of 3%. In case this individual does not decide to disclose this in its return of income, then there would be an additional penalty of 10% in case an assessing officer discovers this subsequently. However, in case if there is a search and under certain specified circumstances, this undisclosed income is detected, then there could be still higher penalty of 30% or 60% in certain specific situations. Hence, this scheme does provide a good opportunity for the individual to come clean and disclose their income by way of deposits. Otherwise, there could be consequences under the Income Tax Act.